morning, Mark Soderberg with ADM Investor Services with your morning ag market outlook for Thursday, November 21st. Trading the ag space rather quiet overnight and not much of a range. Corn right now is steady to about a penny lower, steady to about a penny higher in the soybeans. Wheat prices managed to hold on to 2 to 3 cent gains. A little bit lower in the meal, a little bit higher in the oil. Oil likely drawing a little bit of support from higher energy prices as they recover from yesterday's sell-off. Speculative traders were buyers of nearly 10,000 contracts of corn yesterday, extending their long position now to over 115,000 contracts. They were also sellers of about 5,000 contracts in the bean oil, 2,000 soybeans, while being light buyers in both meal and in the wheat. Open interest in wheat, however, did plunge about 11,000 contracts yesterday, perhaps an indication of traders exiting the market given the uncertainty surrounding increased tensions in the Black Sea region. Bean oil open interest also dropped about 6,000 contracts yesterday, I think a sign of long liquidation from some of these recently established money manager long positions. Fresh news rather scarce, however. We do have export sales later this morning. Yesterday's EIA report showed ethanol production at 326 million gallons, was down from the previous week's 327, however, still the second highest reported output ever. Corn usage remains well above the pace needed to reach the USDA corn usage forecast of 5.45 billion bushels. So I do look for the USDA to kick this up here, at least 25 to 50 million bushels in December. Spot board crush margins did slip about 7 cents yesterday to 122.5, a 5-month low, driven by the correction in soybean oil prices. This week, President Lula in Brazil did host private meetings with the Chinese president following this week's G20 summit in Brazil, deepening ties between the two nations by signing a number of trade agreements across a host of sectors. Among them, they have agreed to open markets in sorghum, fish meal, and other ag products, just continuing to deepen the ties between the two global superpowers. D's corn here continues to struggle to trade back up to the November high at 434 3/4, backing up now to just below 430, support below the market. We've got the 50-day moving average at 418. Spreads remain supportive, however, on strong demand, limited selling interest from the U.S. farmer, as well as logistical costs coming down given the recent rains having lifted the interior river systems. Inside trade overnight here on the Jan beans as prices hover just below the $10 level, with the contract lows within striking distance just below 9.75. The path of least resistance does seem lower, however, unless advertised rains early next week and some of the drier areas in South America turn out to be disappointing. Spreads here also remain strong. We do expect an update from the Buenos Aires Grain Exchange later today on the Argentine crops. Diesel oil did find support overnight at its 100-day moving average, while demand remains strong. Uncertainty over the expiring blender credits and biofuel mandates will limit the upside, at least for now. D's meal that just continues to hover just above its recent contract low, with major support below the market at the August 2020 low near 280. And wheat prices continue to bounce off their recent lows, drawing support from the increased tensions in the Black Sea. Ukraine was able to shoot down 6 of 7 Russian cruise missiles overnight. This likely in response to Ukraine's use of both U.S. and U.K. Weapons deeper into Russia. Also look for some easement in the U.S. drought ratings, with the drought monitor also out just later here this morning. Thank you for listening, everyone, and have a great day.